Welcome to my channel. Making crores of rupees from the stock market is not guaranteed and involves risks. However, there are strategies you can employ to potentially increase your chances of success. Here are some steps to consider. Number 1. Educate yourself. Start by learning about the stock market, investing principles, and different investment strategies. Understand fundamental analysis, technical analysis, risk management, and other key concepts. Number 2. Set clear goals. Define your financial goals and time horizon. This will help you determine your investment strategy and risk tolerance. It's important to have realistic expectations and not solely focus on making millions quickly. Number 3. Research and analysis. Thoroughly research the companies or sectors you are interested in investing in. Analyze their financial statements, market position, competitive advantage, and future growth prospects. Stay updated on relevant news and market trends. Number 4. Diversify your portfolio. Spread your investments across different companies, sectors, and asset classes. Diversification can help reduce risk by not putting all your eggs in one basket. Consider investing in stocks, bonds, index funds, exchange-traded funds, ETFs, and other instruments. Number 5. Long-term investing. Investing with a long-term perspective can be more stable and less risky than short-term trading. Identify solid companies with strong fundamentals and hold on to them for the long haul. Long-term investing allows you to benefit from compounding returns and ride out market volatility. Number 6. Risk management. Set a risk management strategy to protect your capital. This can include setting stop-loss orders, not investing more than you can afford to lose, and having a diversified portfolio. It's crucial to have a plan in place to handle potential losses. Number 7. Stay disciplined. Emotions can often cloud judgment in the stock market. Develop a disciplined approach by sticking to your investment plan, avoiding impulsive decisions, and not letting fear or greed drive your actions. Number 8. Continual learning. Stay updated on market trends, investment strategies, and economic indicators. Attend seminars, read books, follow reputable financial news sources, and consider consulting with a financial advisor. Number 9. Consider professional advice. If you are unsure about your investment decisions or lack the time and expertise, consider consulting with a financial advisor or wealth manager who can provide personalized guidance based on your financial situation and goals. You can follow these simple steps and do not complicate your investing journey. Remember, the stock market involves inherent risks, and past performance is not indicative of future results. It's essential to conduct your own research, evaluate your risk tolerance, and make informed investment decisions.